Hello and welcome to this episode of Focus On. My name is Giamo Mosipile. The global financial landscape is shifting, and ethical, inclusive financial models are gaining ground. At the forefront of this transformation is Islamic finance, projected to reach $6 trillion by 2026, according to the ICD Refinitiv Islamic Finance Development Indicator. But what does this mean for African businesses today? In today's discussion, we'll explore how Islamic finance is transforming access to funding, attracting interest beyond Muslim majority markets, and scaling through innovation and regulation. Joining me for more now in studio is my guest, Shaheen Suleiman, the executive of Islamic Banking at ABSA. Sir, thanks so much for your time and thanks so much for joining us. Just briefly, we explored the growing interest into Islamic financing and also its evolution now well into today's financial markets. So just beginning at the top, what is it about how Islamic financing is evolving and is gaining ground in today's financial landscape?
Good day, and thank you for having me. I think it's important to maybe start at the outset to give a brief overview of what Islamic finance is. So Islamic finance is based on alternative principles, or rather principles that stimulate and encourage real economic activity. So at the core, it prohibits interest, but it allows trade. So essentially what that means is that it encourages businesses to look at trade principles when looking at financing. So simplistically, removing any speculative transactions, uncertainty in contract. So essentially, those are the core and the foundational principles of Islamic finance.
Sure. I also really want to explore how it seems that interest into Islamic financing is moving beyond Muslim majority markets. As you mentioned, it is an alternative to the traditional banking system. Just tell us a little bit more about that.
Most definitely. So Islamic finance, as you mentioned upfront, in terms of the growth that's been experienced in the industry, if you look at it over the past couple of years, double-digit growth compared to conventional financing. Yes, and we understand that conventional financing has a strong base, but if you look at Islamic finance, because of some of the underlying principles where Islamic finance was not readily available, as financial institutions become more innovative in terms of rolling out Islamic finance product, the demand and the take-up is starting to increase.
In this role or in this journey towards the development of this particular financial system, just tell us about what the regulatory landscape looks like and where do you then find challenges or opportunities yourself as a bank?
So when you look at the regulatory landscape in Islamic finance, specifically if you look at the Middle Eastern countries, there's been a lot of development, encouragement in terms of growing the Islamic finance sector. But if you look closer to home in Africa as well, South Africa specifically, our Tax Act now enables us to have parity between conventional finance and Islamic finance. If you look north of our borders into Africa as well, there's legislation specifically relating to Islamic finance in terms of how to conduct Islamic finance, what are the overarching principles of guidelines within a specific geography to enable Islamic finance. And I think as regulation improves, enables Islamic finance, creates parity between conventional finance structures and Islamic finance structure from a tax perspective, it sets a framework or the benchmark to allow Islamic finance to improve and also to innovate to make sure that we capture a market that's been traditionally not taking up conventional financing. So if you look at Africa specifically, there's a large population that have probably steered clear of finance because of the inherent principles of interest on conventional finance, where traditionally the belief is that if I enter into any finance transaction, it needs to be based on specific principles, and those principles are the principles of trade on Islamic finance. And I also think it's important to maybe just add one more point, is that Islamic finance, as I mentioned upfront, is rooted in historic principles that encourage trade, but it's not only available to people of the Islamic faith. It's a construct based on specific principles available to anyone irrespective of faith.
Sure. But I also understand you've also made mention in other conversations about how the financial model has changed from predominantly retail focused model now towards more sophisticated models that speak to the needs of people who are interested in particularly sticking and abiding to those principles that you mentioned. Just also tell us more about that.
That's an interesting point. So if you look at it not only in the South African context, but if you look at it globally as well, typically where Islamic finance or banking started was to serve the needs of the retail customer. And what that meant is your transactional account or a bit of a savings account in the form of a call or fixed deposit, etc. But as it evolved, as SMEs started coming in and say, how do you help us? As larger corporate businesses started to say, we understand these principles, we like these principles, what can you do as a financial institution to make sure that you assist us? That's where the innovation started coming through. I'll give you a practical example. In South Africa, Sukuk was issued, I think, in 2023, the first rand-denominated Sukuk issued in South Africa. So for the benefit of those that may not know, a Sukuk is the equivalent of an Islamic bond based on Islamic principles. So when you purchase a Sukuk, you're not earning interest, you're earning a return based on a coupon, typically backed by a tangible asset. What does that allow? That allows government to utilize Islamic funding for developmental needs. And if I just take that example where you started off, where we said it started off in the retail sector or segment and then grows. If you look at the capital market base, in Africa alone, I think there's about $100 billion development funding requirement on an annual basis. If you look at structures like Sukuk, which is the Islamic bond, as I mentioned, that's an alternative form of getting funding for development initiatives within Africa to grow our infrastructure and access or tap into alternative forms of capital.
Across the scale of businesses, can you give us a few examples of how ABSA is assisting businesses with the innovative models that are available for those that are interested in Islamic banking?
So from an ABSA perspective, we serve customers from the retail segment, and that's where it started. Islamic banking is celebrating its 20th anniversary come the end of this year. But as we've transitioned on the ABSA CIB side, corporate customers are coming to us with more, let's call it complex needs compared to what we've seen in the past. And I can give you a practical example of a few customers actually in the FMCG sector that came to us and said, we're looking to expand our businesses, but the typical structures that are currently available don't suit our needs. How can you as ABSA CIB solve our needs and structure something that overlay the Islamic principles but enable us to grow? So there's various structures that we've entered into based on the core principles of Islamic finance, always keeping that intact, but making sure that the economic benefits to the customer align to what they would have ordinarily achieved on the conventional banking side, but still giving a solution in line with their financial principles or inherent beliefs as well.
I guess another follow-up question that comes up to my mind, is it ever a matter of also educating and letting people know of the options that are available to them?
Yeah, that's quite an important element. So when it comes to education, I think at times we as bankers take it for granted that everyone understands what Islamic finance is. But the reality is that we spend a lot of time educating our customer set and just people at large in terms of what are the principles of Islamic finance, what differentiates it from conventional finance. And as people become more accustomed, more acclimatized in terms of the different principles, and also the bias that may exist to assume that because it's called Islamic finance, it's only available to a certain subset of the population. So there's active time that we spend to make sure that it's not, as I mentioned upfront, not only available to people of the Islamic faith, but to anyone else looking for this alternative form of finance.
Sure. But then in your opinion, what would you say are the steps that are needed then to unlock this potential that you keep speaking about?
Yes, so I think there's quite a few things. Firstly, from a regulatory perspective, and I'm not only speaking about the South African environment, I'm speaking generally. If you look at it from a regulatory perspective, laws that enable Islamic finance to operate, number one, in terms of, if you look at the Tax Act, does the Tax Act allow for parity in Islamic transactions versus conventional transactions? And let me give you a practical example. On the Islamic finance side, if let's look at financing a property as an example. Typically, Islamic finance is based on the principles of trade. So what would happen there? The bank would buy a property, sell it to the customer at a markup for a deferred payment, just one of the structures that can be utilized. Now, if that automatically triggers transfer duty, it makes Islamic finance more expensive. So thankfully, in South Africa, as an example, the Tax Act allows for Islamic structures, so there isn't that additional tax. So where it's seen as a financing transaction and not a real transfer of property, There's not a tax penalty as a result of that. And globally, there's that shift to say, how do we start catering for Islamic finance in some of our regulatory and some of our legislation to make sure that we enable it to grow Islamic finance. So that's number one from a regulatory perspective. You spoke about education. That's of utmost importance in terms of education and alignment. So globally, there's a standard setting body called the Auditing and Accounting Organization for Islamic Financial Institutions. What they do is that they create parity in terms of the reporting structures, the rules, structures that we utilize when it comes to Islamic finance transactions. And then the last bit would probably be in terms of educating customers at large in terms of how the structure works, what are the benefits, what are some of the features of Islamic finance as well.
When we look forward to the future, what do you think are the things that will certainly shape how Islamic financing is viewed on the African continent?
So if I look at, you mentioned a number 6 trillion upfront. That's an astonishing number in terms of the growth of Islamic finance. The benefit that we have in Africa is the opportunity that's available probably in the unbanked and the underbanked market on the African continent. As our fellow Africans realize the opportunities within Islamic finance, or rather the structures on the Islamic finance side that appeal to the principles, I think the take-up on Islamic finance will be massive. But from an institutional point of view, it's incumbent on us to make sure that we make these structures available. We understand the differences of Islamic finance versus conventional finance, which appeals and then meets the needs on the African continent as a whole. I spoke briefly about the infrastructure benefits when it comes to a sukuk type of instrument, but there's various instruments that Islamic finance has that can be made available. One thing that we touched on, or I alluded to up front, was in the SME space. You would know the SME and the massive growth. I mean, the biggest employers on the continent would probably be SMEs. If we look at SME, typically the challenge they face is access to finance. If you look at some of the Islamic structures, one thing is a muraba structure. What does muraba mean? It basically means that I buy a tangible asset and I sell it to you at a markup for deferred payment. Now, simple Islamic-based principles or structures can be applied widely for access to finance in the SME space, as an example. So for me, it's a matter of understanding what the needs are and making sure that these structures become available and widely taken up as well.
We could continue on just going into a deeper delve into what your day-to-day looks like, but that's unfortunately where we have to wrap it up. Thank you so much. And that is how we wrap up this episode of Focus On. I'd like to thank my guest who has joined me in studio, Shaheen Suleiman, the Executive of Islamic Banking at ABSA, for engaging on this discussion. From me, Giamo Mosipile, and the rest of the CNBC Africa team, it's goodbye for now.